Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Thursday, the 15th of May, 2008, and the market's closed. S&P 500 finished with a gain of $1.80 today, or about 1.3%. And the buyers just don't want to stay away from here. Let's take a look at Fibonacci. I guess I've got that on the screen. The Fibonacci levels that we're looking at right here, from the highs back in October to the January and March lows. Right now the market has gone a little bit past the 50% retracement level, and more importantly what we saw today is that it broke this downtrend line. And again, downtrend lines, moving averages, that sort of thing, they all act as potential levels of resistance when the market is rallying up to them, but it doesn't mean the market has to stop there or that there will be resistance found. It means that's an area where it pays to pay close attention to the shorter term action and see if there's evidence that maybe that trend line is bringing sellers to the market. And for the last 2 weeks it has brought sellers to the market, but today obviously we pushed right up through that level, and now we're headed back up towards that declining 200-day moving average. I hate to sound like I'm continuing to repeat myself over and over again, but on the weekly time frame there are still reasons for longer term concern, but it's been a great trading environment, and that's what you need to focus on is the trading moves in here. And right now, yesterday's what looked like a failed move late in the afternoon, I pointed out perhaps it was going to set up a right shoulder, and that's what it's looking a lot more like right now. Is that weakness caught a lot of people off guard, got them nervous a little bit in here, and now we've got that market right back up above that neckline here at about 142.20 or so. And based on that, we could come up with a price objective. Using this level here of 138.5 up to, let's just call it 142 even. That would be about 3.5 points. So add 3.5 points up to add 3.5 points to the breakout point at 142, and that would give us a price objective of about 145.5, and that would actually bring it up to this 2/3 retracement level. Again, that doesn't mean you just go ahead and buy right now and put in your sell order at 145.20 or whatever. It means that these are potential levels where the market may continue to move towards, and if it does, then you just want to keep continuing to follow the path of least resistance and trade in the direction of the trend, and look for the evidence that there might be sellers in that area when the market approaches it. They're only potential levels of resistance, and a lot of times the market can just push right up through them. Here on the 10-minute time frame, we can see that inverted head and shoulders pattern a little bit more clearly here. And actually, you look at the head, we've got a inverted head and shoulders pattern within that, pattern within a pattern. So right now, I think that the more important level of support for this market is going to be about 141. If it can continue to hold above there, then there's really no reason to be nervous about the upside in here. But just be aware of the longer term pictures. Yesterday we saw that that late breakdown. Well, this morning the market came up, and here's the VWAP for the last 2 days. You can see that the sellers from yesterday were kind of still around a little bit in the morning, taking advantage of the early strength. The market pushed a bit lower through there, and then late in the afternoon, as it became apparent that the buyers were back, then I think short sellers are really getting it stuck to them pretty good in here. And if you stay stubborn in the face of what the market's telling you, then it's going to result in losses, and that's what I think the short sellers are experiencing right now. The Russell 2000. Let's take a look at the semiconductors. These guys went positive yesterday. For the year, that is, they went positive, and I'd pointed that out on my blog, just in that little screen where I show the percentage, for the week, the month, and the year, that they had gone positive for the year. And here you can see they've taken that out. This market has been just grinding higher. Now it seems as though the buyers have a little bit more conviction. I think the short sellers are really starting to feel the pain in here. Where does this market have the potential to go before it meets a source of supply that might slow it down? In other words, where's the potential for resistance? I think you're right about there. So be careful about chasing this market. As good as the short-term action is, don't be complacent and allow those profits to slip away from you. You want to be aware that, yeah, it's broken out on this short-term time frame and making higher highs and higher lows, and as long as it does that, continue to stick with the trend, but be aware that there's the potential for longer-term sources of supply to be released to this market. So all that means is when the market does show signs of interrupting this pattern of higher highs and higher lows, that you want to be quick to get out and take your profits before the market relieves them from your account. So the semiconductors act great, much better obviously than the financials, which are just basically stuck down here within a range. By the way, check out my blog today, alphatrends.net, for a lot of you people who read or listen to my videos solely on YouTube. Charles Kirk of the Kirk Report, who does a fantastic job of linking information and a lot of original research as well, did a interview with me, asked me 10 questions about my book. He got an advanced electronic copy of it, and wrote up some nice words and had some questions as well to help you understand that a little bit better. So be sure to go to alphatrends.net, and also thekirkreport.com is a great resource that you should be checking out every day. The Russell 2000, though, we saw broke the trend line about 2 weeks ago, and 3 days ago it got above this important $73 level. It does remain below the declining 200-day moving average, but again, like I said yesterday, I think as long as 72, 75 to 73 continues to hold up, then this market should continue to be, give the benefit of the doubt to the buyers. The buyers are in control here. It didn't make a higher high today, so that's just something to be aware of. But if it starts breaking down, then the proper course of action is to move to the sidelines. Until then, though, the path of least resistance is higher. It's innocent until proven guilty. We've got just a short-term little bit of resistance being found in here the last couple days at about this $74.50 level. And we do have that declining 200-day moving average just to give us something to think about in terms of the larger context. The NASDAQ 100, obviously this market has been the strongest all year. And let me just confirm that. The NASDAQ, well, I don't have that here in front of me, but it's right behind the semiconductors in that it's coming close to unchanged for the year. We're still down a few percent, but just a heck of a recovery rally in here, further than I've expected it to take us. But again, the market doesn't care what I think. What we have to do is listen to the message of the market, be aware of important things such as this trend line. If this trend line is to break near that $49 level, then I think that you want to get a little bit more defensive. Probably we would then head for a test of 48 or so. But for now, the market continues to act real strong. If we take a look at Fibonacci on here, this gives us a little bit of reason, just something to be aware of. They're not necessarily resistance levels, but enough people look at them that a lot of times they'll take the action of taking profits up near that 2/3 retracement level, or to maybe discontinue aggressive purchases. So what we're doing here is measuring from the high back in back here in October. We're measuring from this high to this low right here. So this is that range. What we do is then we say 38.2% retracement would take it to this line right here. A 50% retracement brings it right here, and a 61.8% retracement, which the thinking is when it goes beyond that, then the market has fully recovered. I think that 1 day's action is too early to say it's fully recovered, but the buyers are clearly giving the short sellers a very hard time in this market, and there's a lot of great stocks setting up bullishly and continuing to act bullishly. I've been putting a lot of symbols on this week, and a lot of those stocks have done well. So there's a lot of good stocks to look at. Just be aware of these, higher lows, 49.5 now, and the 49 level is where we've got this rising 5-day moving average. So that's something to be aware of. And we're closing in on 50. So a lot of reasons to be very encouraged with this action. But as always, defense wins the game, so don't allow yourself to become too complacent and forget about managing risk.